There we go.
Okay, it looks like we're live. Can you hear me, Denzel?
Yep, we're good.
Okay, excellent. Hello, everyone, and welcome. This is our first recording of what we are going to call the Winnipeg Market Watch podcast, where Denzel and I talk about recent developments in the Winnipeg real estate market. Denzel is a very experienced home renovator, flipper, BRRR expert, and otherwise real estate guy. My name is Keenan Brown. I'm a realtor with Judy Lindsay team, and I specialize in investment real estate as well. How are you today, Denzel?
Doing pretty good. It's been just kind of getting back into the swing of things after the new year. There's a lot of stuff going on during the holidays for me and my family. So yeah, I'm here sitting on a podcast with you.
Awesome. Well, I love to hear that. And I will not keep you guys listening at home any longer. We're going to lay out what we're going to talk about today. We've got a lot of exciting stuff planned for you, and I think you're really going to enjoy this. We're going to start by talking off about the market. We're going to then shift our discussion into some of Denzel's ongoing real estate developments and some of the stuff that he has planned for Q1 2024. And then at the end of the show, we're going to talk a little bit about what Denzel and I have done in the past to get to where we are today. And in future episodes, we will have special guests who are experts within our local real estate community for us to interview and learn about who they are, how they got started, and what they're doing now. So, without further ado, I'd like to discuss a little bit about the recent market data that we've seen for the month of December 2023. For those of you at home who don't know, in the world of real estate, the market data for the previous month is always released in the first 4 to 5 days of the next month upcoming. So, for those of you who have been following the City of Winnipeg HPI for detached homes, you might know that November was the low of this year at 379,800, and the December data actually rose up to 380,000. That leaves us with a 3.57% gain year to date. And we are now currently down about 11.5% from the all time high of May 2022. Denzel, are you surprised at any of these figures? Is this what you expected?
For me, I definitely was anticipating the low to be in and around November and December, sort of similar to all the other years that I was in real estate outside of the pandemic in the 2020. But yeah, no, the way that the year panned out was actually pretty accurate to what I was anticipating. And so, um, if anything, I was more surprised of the resiliency of how well the prices, stood strong.
I definitely think I was surprised as well. And in my article, I actually wrote that I consider it to be somewhat of a late Christmas present to see that data because I think most people in the community expected there to be a little bit more of a decline into the last month of the year. So, very, very exciting stuff. It's a great springboard to launch our real estate market into the new year. Um, I wanted to take a minute and ask you about some of the interesting news regarding interest rates, mostly coming from the United States. Specifically, for those of you who are unaware, on Wednesday, December 13th, the US Federal Reserve once again held its key interest rate at the target level. However, there was guidance provided that they've penciled in at least 3 rate cuts in 2024, presumably of 0.25% each. Um, as many of you know, in Canada, our central bank tends to follow suit with whatever the United States is doing, mostly for currency reasons, but other considerations are also factored in there. Denzel, what do you think about these rate cuts? Can you talk to us a little bit about how those rate cuts in the future might impact your business and what you do?
Well, as I never got to introduce a little bit about what I do. I flip houses here in Winnipeg. I also execute the burst strategy, just like Keenan was saying, and all of this is going to positively impact my business. I think that if I could rewind time and was a little bit more familiar with how the interest rate environment typically goes, or at least what it can do, I probably would have been aggressively buying more in 2020 to prepare for that spring in 2021. Now, looking at where we're at right now, buyer sentiment, throughout the city, it seems like for people who are not in real estate, seem to be pretty low still. They talk, the first thing that comes to mind when people are thinking about property at the moment who aren't involved in the world of real estate is, hey, those interest rates are pretty high.
Yeah.
Like I know for you, Keenan, you deal with quite a bit of buyers, and I'm sure for those who aren't as aware of what's happening, it's just that the news is pushing out the interest rate story so much that it's the first thing that comes to mind. Now, um, having said that, I talk to anyone in real estate, whether it's an agent, it's another investor, or a mortgage broker, anything like that. They're really optimistic about the coming spring. Because for all of us, if prices, you know, come up, let's say in the spring, another 6, 7, 8, 10%, who knows? Like it's good for everyone, at least in the business. And now even for sellers, they're feeling good about going to market and bringing their house, ready for sale. The only downside, I suppose, is buyers now having to deal with higher prices. But
Yeah.
buyers are there's always going to be something with a buyer, right?
Absolutely. And with mortgage rates already reacting to the news that there might be rate cuts, it's looking like the 5 year fixed for an insured mortgage is already available under 5% for the first time in a few months here, which that actually is interesting. And to segue what you just said, um, the market currently over the last month or two was at somewhat of a gridlock situation where sellers didn't want to list until rates came down and buyers didn't want to buy until rates came down. And it's looking like if they indeed do, then a lot of those people who have been waiting will start listing product and also aiming to purchase. And it's my opinion that those that start earlier are going to see very good success in no matter which side of the transaction they happen to be on.
For sure.
So moving on to some of the other interesting data here, I'm going to talk very briefly about supply. It looks to me that in terms of residential detached homes citywide, the December data shows a lot lower current and active listings than we saw in November, and also a very similar number of transactions, which is not seasonally typical. Um, I think that that might have something to do with the price gain or at least stabilization that we saw in the HPI. But it is interesting because this is definitely atypical behavior for the month of December. Any comments on that, Denzel?
For Sorry, Keenan, I just got a text here.
It's okay. No
Um,
worries.
can you repeat that question?
I had just asked if you think that there's anything interesting or worth commenting on about the fact that the number of current listings is significantly down from November to December, and the number of transactions is again once lower month over month. However, not at a commensurate rate that we've seen over the last 4 years. This to me means that there's more transactions occurring than many would have expected this month, and that might tie into the price gains that we saw in the HPI, or at least the stabilization of 379, 800 to 380,000. Would you agree with that?
Oh yeah, 100%. Well, we actually have a listing in Meadowood, St. Vital right now, which is getting a ton of activity. And, I think that has something to do with the supply. Not only is there, I mean, sure, one could say that there's not many sales happening, but in the right areas, it's definitely busy. Which only helps someone like myself who is out here flipping houses. To have that sort of activity on a listing is great.
Absolutely. And to speak a little bit more to that listing that we've got going on here in Meadowood, if I pull up the MLS and I look at everything in the general south central part of Winnipeg, excluding a few of the more northern parts of that southern area, there's very, very limited supply. When I exclude vacant land and I look only at homes built after about 1950, there's maybe 10 listings total in that entire chunk of the city, which is going to speak volumes to why 35 plus showings on a little buy level in Meadowood is occurring here in the first week of the year.
Yeah, that's incredible. You know what? That's
Absolutely.
actually a record. Hey, I've never had that many showings on a house before. Uh,
Really? Well, what a surprise in the first week of January then, hey?
I know. I mean, the last time I ever had this sort of activity on a listing was 2022 in February, and we were in the middle of selling this little 1.5 story on a street called Minigaff in the Sinclair Park area. I think it's actually Robertson. But
Mhm.
yeah, like just to see this kind of activity is it's awesome.
Absolutely. Let's talk a little bit about some of the hottest areas for the year in 2023. These are classified by the absorption rate, which, for those of you at home, if you're unfamiliar with absorption, it's simply the rate at which listings are being sold in an area versus coming onto the market by percent. So, for example, an absorption rate of 85% means 85% of the listings put up in any given MLS area sell. So, looking at the list here for 2023, the hottest areas were 3F, which is the southern part of North Kildonan, at 96%, 4J, which is the eastern part of Tyndall Park, also at 96%, the northern part of North Kildonan, 3G, at 95%, and Southdale at 93%, which is Area 2H. Any surprises in these areas for you, Denzel? Was there any area you thought would have been hotter based on your market experience this past year?
I'm just taking a little bit of a closer look of those um areas to see if anything really is or was surprising to me. But you know what? I think all of these were to be expected. I mean, these are really attractive neighborhoods in Winnipeg. None of the areas really jump out at me as like, oh, I wasn't really expecting that. For
Right.
Winnipeggers, at least, for those that are that grew up here, um, you know, all the areas that Keenan just listed are definitely the places that you would want to be, or at least that you would want to stay in if it's an area that you grew up in. Um,
For sure.
yeah. What about for you? Did any of those jump out at you as a surprise?
Honestly, yes. So I had been following this data for more than a year now, but I had always been of the opinion that Tyndall Park would eventually slow down. I had just simply thought that, okay, we've hit the point where prices are now sufficiently in line with the rest of the city. But that area just seemed to have been gridlocked. It was almost impossible to list a house in either 4J or 4K, the east and west side of Tyndall Park, respectively, and not end up in a situation where it's sold basically the same week. And I just think that that is a testament to the growth of Winnipeg as a city, and
Yeah,
also the extended desirability of some of these locations that aren't as central, which traditionally over the past 30 years hasn't been a notable attribute for the city. So I would say that maybe everybody's perspective on what is and isn't reasonable within our perimeter is going to change going forward. And as we start seeing the newer developments push beyond the perimeter, a lot of these neighborhoods that were formerly on the periphery are going to see a lot more attractive offers being put in by buyers shopping in the general zone they fall into.
absolutely.
So, looking through the list here, are there any neighborhoods specifically that you're watching and trying to make a purchase in 2024, or at least keeping a close eye on as we proceed through the new year?
My strategy for the new year is definitely going to be paying attention to areas such as St. Vital, Transcona, and Tyndall Park. You know, it's
Mm,
I had the opportunity to actually do a rehab in the Maples, and I actually grew up in the Maples. When I was in high school, my dad was living out there, and to have the opportunity to renovate a property and resell it to someone else moving into the area, there was a little bit more. I mean, outside business aside, there was some sentimental value to that particular project, to me at least. Um, and now with me knocking that off of my list of things done, I definitely want to get into a house that's in the Tyndall Park area. So I could see myself doing a bit of some private marketing for lead generation in that area. Um, and a new area that's kind of we were spending a lot of time in just this past week was actually in Transcona West to be exact. Um, you know, just looking for another property to buy.
excellent choice. For those of you at home, Transcona Area 3L had 91% absorption rate this past year, which is absolutely excellent. And looking at the data here, there's an average sale price of only 290,000. To speak a little more to that, Denzel, all of those areas you listed have generally had average sale prices in and around the 375 or lower range. is there any strategy as to keeping the prices in that very affordable zone as opposed to reaching for some of the more expensive areas?
You know what? I have had tons of experience flipping houses over the past 3 years. I've done over 50 flips probably. And in my experience, I think it's best to stay inside of where the bulk of the buyers are. And in Winnipeg, Keenan mentioned this earlier that right now the benchmark price is just under 380,000. Is that right, Keenan?
That's correct. Yeah.
And so if one could argue that the majority of the people looking can or are pre-approved for that amount. And so if I can get into a property where our after repair value is going to be inside of the median price range, it just allows me to have more likelihood of selling that house at the end because I've had deals where, we're doing all of the things to it. We're making it look beautiful. It's in an area like, let's just say where the average sale price is in the 500s. And, in an interest rate environment like this, it's just your buyer pool shrinks. Not to say that you can't sell or flip houses in that price point, but it just becomes increasingly harder to do that. You might be on the market a little longer. The buyers could be a little bit more particular with how the finishes are. Um, and there's just a lot of details that cannot be missed in those price points. Whereas in in the 300s, a good example is I've gone into a house before and had to change all of the windows, even though the windows were good and functional. Whereas, in the average home, if you walk in there as a first time home buyer and you see that the windows has aluminum windows, but the windows aren't exactly leaking and they're functional and there's nothing wrong with them, I as a investor, I'm thinking, okay, I can save 5, 6, 7 grand here and not have to do the windows. So more so it's about being in that pool of buyers where the majority are. And so if you can do that, especially in a time like today where the interest rates are high and its affordability is low, it's, in my opinion, a little bit better of a strategy to be doing that instead of playing in the higher price points for the time being. There's a time in the market where it makes sense and you can kind of go for those bigger deals. But where you're trying to be profitable as a house flipper or even a developer, it's just better to be in the lower price points, in my opinion.
Absolutely. And I think that that's a lesson that many might have learned over this past year as we saw a lot of pain in the higher price points with most homes being negotiated down and a lot of the more affordable stuff in that 300, maybe pushing up into the 400,000 range a little bit, actually really go and see multiple offers and have tons of showings.
Yeah.
So we've already touched on this a little bit, but how is your early 2024 business strategy playing out so far? And are you doing anything different this year than you might have been doing at this time last year?
Well, so far it's going great. I really went into this year with the mindset of just I'm going to work a little bit more on the acquisition side of things in my business and spend more time and energy sourcing really great deals in the marketplace, both public and private. We spent the entire week this week, me and a few other of people that I had working with me delivering flyers in as mentioned in Transcona. And I'm really trying to step up the wholesaling side of my business. Um, yeah, and it's going great so far. I have a goal of at least getting one deal done a month. We were just in a house together yesterday, Keenan. We got a deal done yesterday, so that was great.
We
Um,
absolutely
so that
did.
so that we're one out of 12 so far, or one for one. Um, and yeah, I think for me, with what I've done in all of the flips that I've had over the past little bit, my goal for this year is to bring value to the market. And so if that's, bringing more deals to other investors so that they can get them and have the opportunity to use whatever strategy it is that they're pursuing at that time. And for me, I'm only really looking to maybe flip 4 to 6 houses this year. Now, having said that, if a good deal's there, me and my partners are definitely jumping on that. Uh, but in order for me to flip a house at this time, there needs to be a really good, healthy profit in that deal for me. Otherwise, we're just going to be doing a ton of assignments, and yeah.
Oh, absolutely. So let me just elaborate on something that you said and ask you kind of a leading question based on that last comment of if the deal is great, we'll gladly do the project. However, we're focusing on assignment. Is there a line that you would classify a deal as better to be assigned and take the faster profit? Or is there generally the preference to do the deal if there's a certain margin as opposed to selling it to somebody else?
Right. So for me, in order for me to get up and put my time and energy into raising capital and putting the deal together and closing on it and going through the whole thing, there would need to be a minimum 50 to 60 thousand dollars worth of net profit after closing costs, holding costs, um, and anything like that. Anything
Of
less than
course.
that for me would likely be assigned. And there's tons of flippers out there who will, they see $20,000 at the end of it and they're like, I'll do that deal. And so, everyone's numbers are different. Um, Again, for me, I do this full time and I have the opportunity to be spending a ton of time on the acquisition side of things. And so, while all of my investor buyers are at work, I'm, walking the street and dropping the letters off in the mailboxes and, hitting up the foreclosure list and calling agents for opportunities. And so I think that's where I'm going to be, like I mentioned, spending a lot of my time because I have the time to be doing that. But yeah, for me to classify something as, okay, I'm gonna do this, it would definitely need to be, 50 to 60 thousand dollars as a bottom line. Oh, and,
Absolutely.
and it
Yeah.
would be done within inside of 3 to 4 months.
Okay, so it's not just a profitability thing, it's also a pace. Like if the project is something that looks like it could take a calendar year to complete, you wouldn't necessarily jump into that, even if it did look like the end would have a pretty substantial profit for you.
Absolutely. Because I try to look at it more so of like okay, what's the monthly income provided the house sells for what it is projected to sell for, so
Right.
we're looking at a house right now. I won't say the address, but I have a property out in Charleswood, and we had bought that last year, Keenan, for pretty much, the price of the land at the time, not knowing what the condition of the foundation was going to be in. Um, and we get in there, we clean it out, and sure enough, the house is in great shape. So now here I am. I have this house for, what we bought it for, which was it was a tax sale, so it was cheap. It was 170 grand. And And here I am, I'm looking at this thing. Okay, if we get through this renovation, you know, we're going to be making north of 160 grand on this thing. So, like, that is an absolute home run, right?
Hmm.
Uh, but there is something to be said about how long that deal has taken to me to this point, right? So we bought that in April, it's January. It was a full gut right to the studs. Um, because of some delays with contractors and permits and things like that, here we are today. But my point is, you look at that opportunity and you break it down by the month and okay, so if it takes let's say it does take us a year to sell, theoretically, right? You do
Hmm.
160 divided by 12, it's still a reasonable profit per month, right? So, yeah.
Well, that's a good way to put it. And for those of you who are maybe new to the home renovation and real estate flipping or refinancing world, a good rule of thumb is if you think that something is going to take a very, very long time, expect delays, just in general. There's a lot of questions that are going to be answered when you get into a real estate project. And usually you're purchasing a property that was under some sort of distress. You're going to discover things that you may not have necessarily realized. And that will absolutely need to be factored into your calculations, just like Denzel did here at this home in Charleswood that he is speaking about here today. So With that being said, do you have any other projects that you're planning to bring to market in the first quarter of this year?
Yep. So we have four properties coming to the market in the new five actually.
Five.
We yeah, so we're really busy to start off the new year. We have a bungalow coming to market in Charleswood, a 1.5 story coming to market in Crescentwood. I have another little house in St. James that's going to be ready for the market in February. And then, we have the Meadowwood bi-level that's already on the market. And then we have another small bungalow that should be available just before the end of March. Um, yeah.
That's an awful lot of supply. That's
Yeah.
that's more than most folks have. So if I understand correctly, then you've got 4 to 5 projects currently on the go. I know one of them is actually on the market at this present moment in time because I've actually listed it. But of the remaining 4, are you having a difficult time managing that kind of workload at this point in the year, or are you finding that you've kind of found your groove and things are chugging along effectively?
I'm working on optimizing things. I oftentimes this might sound weird to some, but when I'm in my car, I speak out loud because it's just there's something about talking to yourself that helps me at least. And I asked myself, what is it that I need to change in the new year so that I could have a successful one? And one of those was optimizing the speed in which I complete these projects, because one of the bottlenecks in my business at the moment is the fact that I just have a lot on my plate often. And I had some pretty hard lessons to learn at the midway point of 2022, which really turned me off from hiring a general contractor. And from that point to today, I've pretty much taken the reins on all my projects and have attempted to act as general contractor um, for the entire time. And you know, my skill set isn't necessarily being a project manager, although I think if that was where all my time and energy was to be spent, I think that I'd be fantastic at it just because of my work ethic. But my real skill lies in sales, negotiation, and lead generation. Just like yourself, as a realtor, it's just what I'm good at. I'm good on the phone, I'm good with people. Um, and so going into the new year, I think for me is I want to be less involved with managing of the project. And I don't mean I'm not going to be showing up to the house and not knowing what's going on week to week, but more so I don't want to be the person scheduling the plumber and then scheduling the electrician and then having to submit my order to the kitchen company and etc. I just really want to focus all of my time and energy on raising capital and finding deals. And I think that's the highest and best use of my time. And then in the week, stop by the project, see how it's going, check in with the contractor. If there is issues with the project, discuss it, solve the problem, and then move on. Because we really need to be in and out of these things in order to be profitable, or at least to maximize profits for myself and my investors. We got to be in and out within 3 to 4 months max.
Right.
Um, Anything over and above that, things start to get weird, and all it does is chew away at your profit. And you don't want to get into a situation where I'm not wanting to be in a situation anymore where we're not listing in desirable times. Like any in my experience so far, having any possession dates that are in June or July or in even May, one could argue that all of those properties that were purchased at that time is likely to be ready for the market during the fall. And the fall months is September, October, and then late fall, November. And the values typically in a normal market, which it seems that we're in at the moment, just based on prices and stuff and how those have moved, the sales aren't as strong. Could you agree, Keenan?
Yeah, I would say both anecdotally and in the data, we have not had a strong fall, particularly over the last couple of years at least
Yeah.
compared to the spring that we had seen that same year, is what I'm specifically comparing to. But I also know about your stuff, and I know that there were several circumstances where, at least in my opinion, I thought you got some very good outcomes in the spring months when we did have your stuff listed at that point. But
Oh,
I also know
absolutely.
I also know that there were several instances of very late in the year listings that probably didn't get the eyes that they would have gotten had they been listed sometime between January and maybe April.
Yes, for sure. Um, And so having said that, like it's just important, like I have whenever I'm negotiating a contract, I always have to try to look ahead, like at least 6 months into the future as to like, okay, when this possession date comes, what's the realistic timeline for the rehab? And then when is this person or when am I going to be able to bring this to the market? Or how long is it going to take to execute the strategy is the question really. Um, so yeah, going into the new year, to summarize everything that I just said, going to be focusing more of my time and attention to acquisitions and then delegating out the construction piece um, to a reliable, trustworthy general contractor.
I think that's an excellent strategy. And I think that for those of you who are interested in entering the house flipping realm, that is something that I would also advise for you to take upon yourself, as opposed to being a little bit more hands off, at least in my opinion, as a realtor looking in and watching Denzel, as well as other investors, try to navigate the projects that they've acquired for themselves.
Yep, 100% agree.
So I'm going to ask another question, and this is something that I'm asked as a realtor very often by investors and also people aspiring to become real estate investors. So, Denzel, you have a pretty substantial real estate portfolio of buy and hold property that you may or may not have refinanced over the years. A lot of new investors come to me and they specifically want advice regarding the BRRR strategy, which, for those of you listening, if you're not familiar, that is the strategy in which you buy, renovate, refinance, rent, and repeat a property as a way to manipulate the finances of the property to effectively be able to refinance back the down payment and improvements while keeping the property cash flowing with a tenant inside the house. Are you interested in doing any more BRRRR projects? And if you were to start again from scratch this year, what kind of strategy would you be using to rebuild your real estate portfolio in 2024?
I certainly think that there's some value in starting off with the burrs. Now, contrary to what some of my mentors might say, the BRRRR, especially for a real estate entrepreneur, if you're trying to make this like a full-time business and build a bit of a personal brand to assist with raising capital and et cetera, BRRRRs are way easier to execute than house flips. We're in the Winnipeg market specifically. When I'm on the MLS and I'm looking, there's deals there where if I was back in 2020, I'm looking at that and I'm like, wow, I can't believe nobody's buying this. Because in 2021 and 2022, when the craziness was happening, there was deals that were just getting bid up, and there was no chance that anyone was going to find a reasonable BRRRR on the market. Now, with the amount of inventory, and I'm not saying there's a ton of inventory even on the market. It's just that there's way less competition out there. And so where the values are today, and with the burst strategy in mind, I believe that it's a lot easier for newer investors to get in the game and do their first project. The challenge lies not in finding the deal at the moment, but making the deal work and have positive cash flow. Because of the
Right.
interest rates, there's a lot of investors that I've actually spoken to who are doing the BRRRR right now, who are doing deals to break even. Um, because to them, in their mind, they're going to sit this out, wait a year to 2 years. When the rates improve, should they improve, they'll remortgage then or refinance then, or they'll renew at the lower rates. And so if I were to go back in time, my strategy would be to probably get into a BRRRR same way I did. I would probably slow down the growth a little bit, because when I first started out, I bought 20 houses in like 8 months. It was just the craziest time of my life in real estate.
Yeah,
And so I would do that. And in addition to that, I would continue learning and actually spend a lot more time with acquisitions after that. So it would look a lot like me buying that first rental property, single family or duplex or whatever I found, executing a BRR, and while that BRR was happening, I would then be doing tons of lead generation and building up my buyers list and focusing on assignments. Um, just because at the start, just like any other business, it's tough to generate cash, right? And without a name or without any kind of track record, it's really hard to find people who are willing to invest with you. So, what better way to build trust in the marketplace than to put yourself out there and bring value to the market, whether that's a deal or maybe it's education as you go through your first flip and share your experience. But if it were me, that's definitely where I would start. And if the market, who knows? Like, we really don't know what things are going to look like 90 days from this podcast. Like, we could be talking
yeah.
in March and it could just be nuts, like bidding wars are back, interest rates have gone down a quarter point, and it's just everyone's just back in it, and um, yeah, I just think that if that were to happen and I was in the middle of a bunch of birds, I would go, okay, I'm selling all these now. I'd be like,
Okay.
okay, let's sell these now.
And who could blame you when materially you would be receiving probably offers at least at maybe even in excess of the appraisals that occurred on the property when you did the refi in the first place, which is it's always nice to realize, and as everybody would say, um, although it would leave you without the property itself. So
Right.
I can't blame you for that. Like I would mostly agree that I would probably be on board with exactly that strategy if you had presented it to me at the time. Although hindsight is, of course, always 2020, which is funny because 2020 was the year this all happened as well.
I actually want to add one more thing to that, because
Yeah,
just as to elaborate a little bit more on my thought process there. If the market did something crazy in March or April of this year, and I was a newer investor, and let's say I had two burrs on the go, and checking in with my realtor at the end of the project, and they say, hey, you know what, if you were to sell this thing, there's a good chance that you get maybe 20 to $15,000 over and above that refinance amount, or over and above the appraised value. What I would do then is I would sell those properties, realize those profits, and then actually look for like a turnkey sort of deal with a multi-family property.
interesting.
Small
Okay.
multifamily. Yeah. Only reason why is because in Monopoly, right? If you think about Monopoly,
Hmm.
what do you do when you get those four greenhouses on your block?
You can turn them into hotels.
You get the hotel, right? And so, I've always thought that that was actually funny because in real estate, in the real world, like why, like people do that all the time. They trade up their smaller real estate to get into bigger stuff. Um, and that's something that I would do if I was talking to Denzel and he was just starting out.
I think that that's also a very good idea. And a lot of investors are actually a little bit afraid of multifamily because they are generally more expensive and the values are a little bit more challenging to understand for a layperson. But for those of you entering the space, if you take even a very short period of time to work on understanding exactly how to value multifamily, I do think that it's a very worthwhile thing to learn. And holding even duplexes is a very appropriate way to invest in the world of real estate.
Absolutely.
So let's take a second here and talk a little bit about how exactly you got started. We've discussed sort of vaguely about all of this buying that occurred around 2020, but and I'm sure many of the listeners are also curious, what got you started in real estate? Was there something someone said? Is this a lifetime goal of yours that you're realizing? Or is this something that just naturally happened on its own?
Well, I actually read, so my whole journey started when in 2019. I was at the tail end of my university education. I went to the University of Winnipeg, and my girlfriend actually just graduated dental hygiene at the University of Manitoba, And so she was starting her whole thing with her career. And shortly after that, I realized that I wasn't really interested in school because what it was really was I was spending time with her while I was studying. And so when I was studying alone, I was like, well, this kind of isn't really my thing. I thought that it was a little boring and I didn't like what I was learning exactly. During that time, I picked up the finance Bible, Rich Dad, Poor Dad, just like everybody else who kind of gets into real estate, right? And in the book, the author talks about two distinct assets, and it's stocks and real estate. And in to me, stocks never really made sense. If you a $200 investment going up 100% is still only $200, right? But real estate, what really drove me into that was the idea of just how leverage can go a long way, when used responsibly. And so I started to do a lot more research on real estate investing and how people get into it. And at the time, we had a small amount of savings, my girlfriend and I, and we basically bought a uh, duplex that was under 250,000 at the beginning of 2020. And we were really young at that time. Well, her and I are 27 and 28 respectively today. But when we bought that property, I was only 22 years old. Um, and it was a uncommon thing for the people that I was surrounded by to be doing at that age. And so there was a little bit of, I wouldn't say pushback, but maybe there were some eyes that were on us, like, "Whoa, what are they doing?" kind of thing.
Right.
Um, but looking back, it was probably one of the best decisions I've made because out of all the properties that I own, this one it has one of the best rates out of the real estate that I own. And in addition to that, it just subsidizes my living, right? I have a tenant that basically pays for our mortgage, and my expenses are reduced to very, very close to zero. Um, and so, you know, I mean, we still pay the bills here, like the hydro and all of that, but yeah, that's how I got started. And at the end of this deal, um, I was pretty much hooked on real estate investing. And then shortly after that, I worked on myself, got the skills to learn how to raise money and identify opportunities in the market. And then fast forward 3 years later, here we are today.
Well, that is actually a very exciting way to put it, and it's funny how it did come together in such a way. And that self education process at the start is probably, I think, one of the common things that a lot of people that do end up succeeding in real estate investing have in common. I'd like to ask though, when you were doing your education as to how to raise money and how to really take it to the next level, like so you got in, you figured it out at least a little. Can you talk to us a little bit about the process that you went through as you began to scale and what took you from maybe step 1 and 2 to step 3, 4, 5, and 6?
Well, first and foremost, just coming out of my time in university, I basically applied the same work ethic that I had in my studies to learning about the entire world of residential real estate, at least when it came to single family homes. I got connected with a with a couple mentors, one of which who, again, like I was alluding to, taught me how to raise capital and put these deals together. And then another mentor of mine who owned about 30 rentals at the time. And at that time, what really gave me the confidence to execute the BRRRR, because a lot of my career was started just doing a ton of BRRRRs at the time. Interest rates were low, and so I was buying a lot of rentals and turning them, or sorry, buying a lot of properties and turning them into rentals. But the deal after my duplex, the second one, I was able to raise capital. And again, this is after taking a course from somebody of how to put the money together. After I learned how to raise capital, it was actually from family. I found a deal on the market and I was a little skeptical about doing it at first, but what really gave me that confidence that it was going to work out was the realtor that was working with me actually owned three properties that were very similar to the one that we were looking at in that actual area. And so he sent me an appraisal from 2019 and it was close to 200. And the deal that we were looking at, it was 125,000 on the buy and it was a $10,000 renovation. And I was running my numbers and I was like, oh, like this is gonna work out, with all things considered. And that was basically what really accelerated my business. It wasn't just, having that ability to raise the capital because everyone, I like to tell people who when people tell me, oh, I have problems with money, I always say, they probably have $1 million in their phone. They just don't know who has it. Um, but once I got over that obstacle, it was really just the mindset and the confidence that I had in myself to actually do this. I come from a family, and you and I have talked about this a lot, Keenan,
Mhm.
where being an entrepreneur and getting into real estate like is not common with the people my family members. So to sort of be I guess you can call it, me spearheading this endeavor is was a little scary for me. I didn't know if it was going to work out, but once I saw the money come back and I was able to get my family back their money and a little bit extra, everyone that was involved in that transaction was believing in it after that. So that's pretty much what I would say got me from where I am today to where I was.
Okay, well, that's quite inspiring, actually, for those of you listening that were thinking of doing something like this. I think Denzel's story is a testament to the fact that it is possible, even if you're the first one in your family to ever make an attempt at getting into a business like this, or actually any entrepreneurial endeavor whatsoever. And B, that does speak volumes about your character and your work ethic to be able to take the initiative to make something like this actually possible for yourself and not necessarily rely on somebody else to spoon feed you or put you in the position that you ended up being in. It's very, very admirable and very worthwhile to listen and take good notes on that story for you folks at home. Final question. Where do you think you would like to take your business over the next decade? Is there an end goal? Is there an end game? And is there any grand achievement that you would say is the swan song of your real estate investing career?
In the next 10 years, I see myself getting into the multifamily space for sure. Um, at the early part of my career, I was thinking really big. I wanted to own 1,000 units and um, just be the next Grant Cardone. Just like everybody else who doesn't know anything before they get in. But with my experience now, I'm looking to basically have a portfolio that pays me around $10,000 a month. I want to be able to live a life that is stress free or at least less stressful. And, continue. I would probably still be doing flips, to be honest. Like if there was a good deal, I would do it. Maybe as a lender though. And yeah, for me, real estate was never something that I was trying to, well, actually, I shouldn't say that. I think I'm saying that just based on my experience now, but I more so just want to focus on building a portfolio that allows me to live a life where money is no longer something that I'm always worried about. Um, just like anybody else. Not
I
really that
gotcha.
much of a right answer, but yeah.
Well, it's still reasonable. Like at this point, too, asking anybody where do you see yourself in your business in 10 years is obviously going to have a lot of variability and a lot of subjectivity kind of baked into anything that they say. Because just trying to, like, if you think about your life 10 years ago and try to imagine how you were at that time and imagine where you are now, it probably would be absurd to think that that's even possible. And for a lot of folks, looking at the next 10 years, like it's clear that a lot can happen, but also it's very, very challenging to accurately predict. So to just generally say, like, you want to use your knowledge of real estate and the portfolio that you've developed to provide financial security, stability, and move into a more passive lending role on the best deals, but also focus on remaining an entrepreneur and not use real estate as a means to kind of exit the world of real estate investing in the business, I think is probably an appropriate way to go about it.
Exactly.
So, folks, we are very close to an hour here, and we are trying to keep these short and sweet for you. I hope you enjoyed our first ever episode of the Winnipeg Market Watch podcast. Denzel and I are going to aim to record these the first Saturday of every month here on out. We will be uploading them very shortly thereafter in the following week. If you have any questions for either of us, you can follow me at KeenanB_ on Instagram, and also find me and my writing on Substack, substack.com/Winnipeg Market Watch, where you're probably listening to this Substack or this podcast on right now. Denzel, do you mind sharing your socials with the people listening so they can find you and follow all of the exciting things that you're up to?
Absolutely. So you guys can reach me at or on my Instagram. My handle is Denzel Sullivan. And yeah, that's probably the best way to reach out if you had any questions about the Winnipeg market in particular, or any questions about investing and how to get started.
Well, excellent. Thank you again for tuning in, and I hope all of you have a wonderful 2024, and we will see you next time.